All right, good morning or good evening, depending where you're calling in from. But it looks like we are hitting a minute past that 11 a.m. UTC mark. Again, I'd like to thank everyone for coming in and joining us today, and a big extra thank you for everyone who joined us yesterday on IXS Monthly AMA. I think tonight's call is going to be a pretty interesting one. It's been something that's been on everyone's mind, and it's something that we also touched upon on last night's AMA as well. So today's AMA is entitled Navigating Regulations for Stablecoin Powered Fixed Income Products with OpenTrade, our partner, of course, and our sister company, InvestaX. In simple terms, what is stablecoins? It is basically just fiat-backed USDC, USDT, euros, being brought on chain. And what are fixed income assets? Well, these are your traditional financial assets that are finally coming on chain. We're talking private credit, tokenized money market funds, etc. And why is it now that we're seeing a much more I guess, streamlined adoption of this? Well, it begs the question. I guess we're seeing better regulatory
You there?
clarity around this. Yeah, hey Julian. Yeah, better regulatory clarity around this. I mean, Julian mentioned yesterday that the U.S. Senate's passage of the Genius Act, which
Hello, hello.
basically allows. Hey, Julian. Yeah, we can hear you. Yeah, there's basically a full reserve backing of stable coins and other um, altcoins and DeFi and coins in the space, as well as the mainstream infrastructure build out of, for those who aren't aware, Mastercard's integration of Pfizer's FiUSD across 150 million merchants, showing that stable coins are becoming a trusted rail. And of course, a big shout out and congratulations to our partner OpenTrade for closing out a 7 million USD in funding, showing that there is a major interest in bringing these financial assets on chain. So big for before we begin, just to set the tone here, in a quick, short, one sentence, OpenTrade is a regulated credit infrastructure platform that brings real-world fixed income assets like corporate bonds and money market funds on chain for stablecoin powered yield. And as if you have been following us in our channels for both IXS and InvestaX, we just recently announced on InvestaX that and on IXS as well the high yield corporate bond vault, referencing BlackRock SHIG ETF, and as well as a tokenized money market fund that I believe was just recently announced on InvestX yesterday. And stay tuned as it will be coming down on IXS shortly as well. So without further ado, I'm just going to quickly jump and introduce our guests. I know we usually start with you, Julian, but for the sake of being gentlemen here, let us start with the ladies first. So of course, I would love to bring on shortly to our partner, of course, OpenTrade, to introduce themselves. So Ronnie Jarowek, which is the Senior VP of Sales and BD for OpenTrade. I'm gonna let her introduce herself shortly. Joining us today as well is Nishta Padde, the Chief Legal and Compliance Officer for InvestaX, and of course our CEO and co-founder, Julian Kwan for IXS. So yeah, why don't we start with the ladies first? We'll start with you, Ronnie. A quick introduction yourself, followed by Nisha, and then Julian after.
Thank you very much. Hi everyone. Ronnie Dworak here. As mentioned, I'm the VP, a senior VP of Sales and BD here at OpenTrade. Have been with the company for almost a year or so. My background is actually initially in banking at Standard Chartered, and later in custody in the digital asset subsidiary Zoda Custody. So, pleasure to be on the panel today.
Thanks, Jean. It's a pleasure to be here. My name is Nishta, and as Jean said, I'm Chief Legal and Compliance Officer at InvestaX. Have been with the firm for 5 years now. I'm a qualified India attorney and have advised on a bunch of legal and regulatory matters, been with banks, asset managers in the past. Yeah, looking forward to sharing insights today on stablecoin powered fixed income assets. Thanks.
Gene, did you want me to jump in there?
Yeah, go ahead.
Okay, cool. So I had some technical difficulties. Hi, everyone. Thanks for joining. Appreciate you taking your time out of your day. And for those listening later, my name's Julian. I'm one of the co-founders, CEO of IXS and InvestaX. We've been really very early in the space, building in Asia in the RWA space, looking at putting together key infrastructure that ticks the boxes of legal and compliance, as well as technology related to blockchain, and building this key infrastructure. So we would become important, valuable rails for the growth of the real asset tokenization industry. This year, our focus is solely on fixed income products. They've proven to be the best product market fit because of the unique situation in crypto, where all the stable coins earn zero yield in terms of USDT, USDC to date, but also because real yields are a valuable addition to the digital asset economy that has been living predominantly off DeFi yields. So yeah, we're excited to be working with Ronnie and the team at OpenTrade. There's actually a couple of products we're working on, and I'll try and give most of the floor tonight to the ladies to talk. And yeah, you can direct that. Thanks, Jen.
All right, thanks for those introductions, guys. So just to set the tone here, with over 2 billion in institutional demand, we are definitely seeing a high interest for fixed income assets on chain. And OpenTrade is a platform that offers a complete toolkit that allows that to compliantly deliver high yield products. With, of course, partnering with IXS and InvestaX. IXS, of course, being licensed under the DARE Act, and InvestaX licensed by the MAS Singapore. I guess since the topic is about navigating regulations tonight, it would make sense that I offer the first question to you, Julian and Nishta, right? So, starting the first question for the night here, what are the key regulatory hurdles when offering fixed income instruments on chain, and how do InvestaX and IXS navigate them?
Nishta, I'll let you take that.
Hey, Nisha, I think you dropped off there for a bit, so let me just repeat the question. Or did you hear that? Are you ready to answer?
Sorry, I didn't catch that. I think.
Okay. Yeah, no worries. So the first question is, what are the key regulatory hurdles when offering fixed income instruments on chain, and how does InvestaX and IXS navigate them?
Sure, thanks, Jean. I think that's a great question, and honestly, one of the most important one when you are, developing in this space. But before I kind of dive into the regulatory hurdles and the structure for, the stablecoin powered income instruments that we are offering, I just wanted to touch upon, what kind of motivated us at InvestaX and IXS to offer these products in the first place, and also the broader market opportunity we see around stablecoins. I think Jean initially touched upon the fact that there's a great momentum from the US administration around establishing a stablecoin regulatory framework, especially with the recent passage of the Genius Act. On top of that, I think we've heard a major announcement coming from Walmart and Amazon also planning to issue their own stable coins, signaling kind of how mainstream this space is becoming. I understand from the data that the total amount of stablecoin supply has kind of surpassed US $250 billion, with USDT and USDC kind of making over 90% of the market share. Now, I believe there are, hundreds of stablecoin holders out there, both institutions, individuals, which are holding these in cold wallets, custodial accounts, and even exchange wallets without earning zero yield. So this is where we actually saw that there was not a lack of the demand, but the real gap was the absence of a legal and a compliant infrastructure that could enable, institutional investors to access the fixed income products using their idle stable coins. At InvestaX and IXSwap, we kind of saw the market need, and this is what inspired us to launch our stablecoin powered fixed income product, which we kind of internally call as the Earn product. And this was launched in partnership with OpenTrade. So coming back to, what is the Earn product, how have we structured it, and what are some of the regulatory hurdles that we had to navigate when working on this product and launching this product. from my perspective, how I see the earn product on both the platforms, InvestaX and IXS, is it's a catalog of fixed income generating yield products, where the underlying asset could vary, and this underlying asset, as of date, of course, we are offering U.S. Treasury bills, high yield corporate bonds, but the scope and the future is to offer private credit and many more money market funds on the platform. All of this has to be kind of directly accessible through the stable coins, making the user experience very seamless and transparent. I think on the question of what were the regulatory hurdles, uh, we when we are dealing with fixed income products, we are actually dealing with regulated financial products. We are dealing with bonds, ETFs, T-bills, money market funds, but now trying to deliver them through an entirely new rail or infrastructure, which comprises of blockchain, stable coins, etc. This kind of lies at the intersection of securities law, Payment Services Act in Singapore, money lending regulations, banking regulations, and the fund management laws. So we had to actually, scan through all of these major legislative regulations in Singapore as well as in Bahamas to come to a decision as to how do we structure it. Maybe I'll just dwell a bit on how we have currently structured the earn products on InvestaX, and then I'll talk a bit about the earn interface on InvestaX for our users here. So at InvestaX and IXS, our approach was to build the earn product with a fully licensed and compliant framework. Many of you may be aware that InvestaX already holds a license from MAS for capital market services and a recognized market operator license. As well as similarly on the IXS side, we hold a DARE license from Securities Commission in Bahamas. We decided to structure the earn product primarily as a lending arrangement by setting up a bankruptcy remote special purpose vehicle that was to act as lender to the qualified borrowers on borrowers/users on both IXP and IXS. Much of the backend plumbing was done alongside OpenTrade, which provides, the necessary regulated FCA regulated entities who enable custody, execution, settlement of the real world assets. Also, another approach that I wanted to, just talk about is around the investor protection, which was very important when we were structuring these products. We wanted to get the maximum investor protection for our institutional clients. This so while we were structuring this, one of the main themes was that how could we make sure that these work as secured loans. So all the loans that are made on the earn products or on the earn platform are kind of fully collateralized, and the eligible collateral is held in secured accounts. There's a security created at the back end in favor of the security trustee. And how this works is that whenever there's an event of default, the lenders can instruct the security trustee to liquidate that collateral. I think this this is a rather long answer from me, but just for more clarity on the structuring of this, um, just wanted to say that the real world powered yield that we are offering through our own products, they have real measurable yield, unlike the DeFi yields, which are quite unpredictable and without proven strategies. Also, while I'm talking here, so I'll just touch upon the earn interface that InvestaX has built. The earn interface on both InvestaX and the IXS platform is highly user intuitive. It allows users to kind of make or start a lending process and make a loan within 2 to 3 clicks. You get information around the annualized percentage yield. There's daily rates, etc., which are given, which makes it very seamless experience for our users. I think also, I wanted to throw a shameless plug there that we are currently offering the earn products at no transaction fee or zero transaction fee at all. So I'd suggest that you go and try and put some stable coins there and let the stables work for you. Sorry, that was a rather long answer, but yeah, I wanted to cover most
No,
things.
that was a great answer, Nishta. I think I might run out of questions for you. I'm just kidding. Well, it seems like you also covered a bit for IXS, but Julian, if there's anything you wanted to touch upon for that question, feel free to do so.
Nope, we'll kick on.
Okay. So I think, to also let our guest Ronnie speak here. The next question is, and we'll let Ronnie go first. What are the main risks and gaps in today's DeFi and RWA landscape that RWA backed yields help solve?
So I kind of view it from the perspective of infrastructure and stability of the yield itself. So railroad assets offer obviously stable and sustainable yields, especially fixed income instruments, but they are ultimately reliant on very inefficient cash settlement cycles. So at each step of the way, you can expect a T+1 or T+2 settlement of the collateral because everything is handled in fiat, right? For each of those steps, you then also, require an intermediary, which, can first of all be very difficult to obtain. If you've ever tried to establish like a network of financial institutions as a fintech, but it also hikes up costs, right? Now, conversely, the DeFi yields are very volatile. If you take a look at Aave or Compound, you'll see that they have a pretty big range. We did some analysis on this recently. It's probably like 9 or 10% in terms of like the range of minimum to maximum supply APR. And they only have an average of say 4.5% or less over a number of months. Now, they're fully correlated with crypto markets, so you are at the mercy of our cycles, and not to mention the yield sources tend to be unsustainable or capped, right? So you might see a really good yield opportunity, but there is a cap of 10 mil, 50 mil on it, etc. And the final point on the DeFi yield is that you are completely dependent on smart contracts because it is fully automated. They depends on what platform you use, they may or may not be audited. Now, the way we think about bringing rolled acid yield on chain is trying to build basically the best of both worlds. So bring in stability and predictability of yield generation, so that our clients can build the kind of product that InvestaX and IXS has built, but with a combination of both on and off chain infrastructure and governance, that will optimize the offering for speed, low cost, efficiency, etc.
All right, thanks for that answer, Ronnie. And I guess from the compliance view, Nishta, is there anything that you'd like to interject from the InvestaX side?
No, as I mentioned, I think for us, compliance has never been an afterthought. We wanted to build this product and architecture with a compliance first approach because that's what gives, the institutional investors the comfort and the confidence to kind of invest in on-chain fixed income instruments. Um, I think having said that, I mentioned there were a number of legislations that we had to scan through to make sure that we are well covered under our licenses here, as well as in Bahamas. And yeah, we just took a compliance first approach. The infrastructure that OpenTrade has built enabled us to plug into them very seamlessly, and bring this to our users as well in a legally compliant manner.
All right. And I guess from the IXS side, Julian, how would you kind of put that purview in from an execution perspective?
Yeah, I mean, just mirroring probably what the ladies have spoken about. There's a big, there's quite a lot to unpack. I mean, people are very confused in the RWA industry because there's so many new platforms launching in the space that are brand new. There's a lot of token launches of sort of RWA platform utility tokens. One of the biggest misconceptions in the space, or the biggest disconnects, is that the real world asset tokens, which are actually the treasuries and the products that we're talking about, are all securities. They need to be issued on licensed venues, and they're mainly for institutional buyers. We were able to put, after many years and our legal team's hard work, to gain licensing to allow us to offer it to institutional and retail investors. And the reality is that that most of the people who are buying, utility tokens in the RWA space, we have one ourselves with IXX, but you've got other ones like the Ondo token, or you've got the other tokens of that are not securities. That's a different sort of buyer pool. So, the interesting um, uh, situation now, in 2025, it's been many years, is we have this sort of um, proper institutional quality assets like OpenTrade and our platforms are bringing out to market. There's institutional buyers now. Um, the industry is growing. In the real world asset tokens are actually growing. You see them on chain. They're serving a real purpose. The yields from, the real yields that we call them, that come from treasuries and money market funds are much more valuable to um, larger, bigger investors than, or at least there's a lot more investors that are interested in real yield fixed income tokens than they are in DeFi yields, right? And that's not to say anything negative about DeFi yields. There's a whole industry out there, but the bigger you go up the chain, you start thinking about groups like Strategy and Metaplanet and the Bitcoin treasury companies and people owning 20 million and 50 million, 5 billion, and the Bitcoin miners and all these groups. They want to put their value and invest their value into real yield products. So it's definitely um, it's a time like we haven't had before. I think that there's now somewhat of convergence. You have a lot of people. You get a lot more buyers of Bitcoin. US regulations doing 180-degree turn this year. Outcoming the stablecoin bill. Scott Bessent, Treasury Secretary of the US, saying we're going to put trillions of stablecoins out there. What that actually means is that there's trillions of dollars of more stablecoins to buy real asset treasury tokens and other types of RWA tokens. So we're going to see an incredible increase in the uh, tokens needed to buy real asset tokens, which are US dollars, USDT, USDC, whatever other names there are out there. Um, and that's what sort of the interesting time that we've got to right now, whereas in previous cycles or every time from 2018, 19, there weren't any treasury tokens back then. Um, there's been a lot of confusion in the space. There wasn't institutional buyers. America was anti everything, and so now we've got a situation in the industry where it's all completely turned around. Well, it's all very positive. So I think that you're going to see hundreds of billions and trillions of dollars of US dollar stable coins coming into market now. Genius Act in the US, I think, will go all the way through government. It's gone through the first layer, and then that's obviously extremely uh, bullish and big tailwinds for products like we're talking about right now, and I think that's all very positive. Thanks, Jim.
All right, now that we've kind of seen this angle from the infrastructure, the compliance, and the execution side, I'm going to direct a question at you, Ronnie. And of course, the other panelists are free to answer this as well. But the next question is, what made OpenTrade the right partner for InvestaX and IXS and vice versa? And the second part to that question is, how does OpenTrade ensure institutional grade compliance in product design, and what is built under the hood?
Maybe I can go first. I see Ronnie has lost connection. Anyways, yeah, I think what made us partner with OpenTrade is primarily their easy to plug in infra, which offered, RWA backed yield in a way that aligns with our MAS licenses, both CMS and RMO, and the fact that we hold certain, uh, or get covered under certain exemptions under the PSA. In short, I think OpenTrade kind of helped us do what we do best, deal in real world securities through compliant rails, while also unlocking access for stablecoin holders globally. I think it's a win-win situation for both the platforms, especially in the context of, the institutional clients who are looking to get regulated, stable yield and understand where the yield is coming from, because all these institutional investors are well versed with fixed income products in the traditional world. So yeah, I see it as a win-win for both platforms.
All right, thanks for that, Nishta. Ronnie, throwing that question back at you. I hope our connection is better now.
Hi, can you hear me?
Yeah, we can hear you now. Yeah.
Okay, great. Sorry about that. Okay, so maybe I'll start off with why IXS and InvestaX were the right partners for us. I mean, it was very clear that they are extremely well positioned on the distribution side. They're operating within a regulated framework, with years of expertise as that bridge between TradFi and DeFi, and that's exactly the kind of partners we're looking to work with. In terms of the OpenTrade platform, it's been purpose built to remain entirely flexible and be integrated seamlessly into our clients' existing user journeys and workflows, irrespective of our clients' licensing or reg status. And that is achieved primarily actually through our legal structure. So, for some background, our yield products are based on secured stablecoin lending to a bankruptcy remote special purpose company, the OpenTrade SPC. And I know that actually Nisha touched upon this sort of at the start of the AMA, but the SPCs are legally obliged under a mass loan agreement to use the proceeds of those loans to purchase eligible collateral. And that is predefined real world asset collateral that secures the loan. And for example, for the products that we have with that we power for IXS and InvestaX, that's a BlackRock ETF and a Fidelity money market fund specifically. So that collateral is actually managed by an FCA regulated asset manager, what we call a sister company of ours called Five Sigma. And all that collateral is held in secured custodial accounts with tier one financial institutions, again, that our clients have a fully perfected security interest in. So there's a security trustee that steps in should something go wrong, there'll be an event of default, etc. Now, the client then begins to, accrue daily loan interest on their principal. And, this structure and flow of funds that I've just described, it basically does not trigger any additional reg or licensing requirements for our clients in the vast majority of jurisdictions globally. And the key component here is that it is decoupled from the way our clients, so IXS and InvestaX, structure the product for their own end users. And it can be adapted entirely to their existing setup and licensing and reg status through specific terms and conditions or through a back-to-back lending model. So, it's basically the flexibility of the product that allowed both IXS and InvestaX to structure it exactly how they wanted it. That made us the right partner here, in my view. And maybe a last point I'd add in terms of achieving this kind of setup. It's difficult and it's costly to build independently. But obviously through the partnership, our clients can focus on what they do best, which is building those great end user facing products. While the back end tech and ops are powered by OpenTrade with no integration costs. So yeah, that's all from me.
All right, passing over the mic to you, Julian.
There's been what where are we on the questions, Dean? There's a lot of ideas
Right.
floating around.
Yeah. So just repeating the question here, what made OpenTrade the right partner for InvestX?
Oh,
Yeah.
yeah, I think people don't really understand that when you're looking at a product on a regulated platform, there's been an incredible amount of work done by the platform to ensure that the products on the platform meet, the necessary requirements from a legal compliance and investment grade quality aspects. So you can't just have just because you have a product doesn't mean anyone's going to list you anywhere. You know, you have to turn up. There's multiple weeks, if not months, of due diligence required. When you have a license, like we do, we've got multiple licenses. We have reporting requirements every day, every week, and who's investing and how does it work and where's the money coming from and where's the product and who's managing it. Do they have experience? Do they have a license to do this? There's a very long list of checklists that we have to go through. So we've looked at lots of previous products, and there are many still floating around the marketplace. We didn't feel like many of them didn't stack up. There are issues with their governance models. There's issues with what they're allowed to do with the capital. There's multiple different elements around any particular investment product and the investment managers that investors have to be aware of. So it's we've seen like thousands of real asset tokens since 2018. I'm going to say like 5 or 6 thousand. Or I used to say that a year ago. It's probably more, and we've listed probably less than 20 in total. So that's the kind of numbers that we've had in the history of our businesses, is saying no to 6,000 products and listing 10 to 20. And I think that and the reason I'm talking about it like this is just to explain why we'd OpenTrade, because they got past all the checklists. It's our neck on the line when we put something up on our platforms. Again, most people don't understand that, respect that, or really care too much, but we obviously do. So if we're going to list stuff, it doesn't mean all the investments are going to work out. It doesn't. There's no guarantees to most of the investments, but at least it's a guarantee that we've done our work as a platform. Investors still have to do their own due diligence, but we believe that this product and this team and this asset is as legitimate as it can get. Again, we're not guaranteeing 100% that all the investments are going to work out. It's just that it pass our test. So that's up to us, and that's the conditions of licensed entities to make decisions on who they can list and who they can't list. And that's something that has been a big challenge for the industry, which is now finally improving, which is the quality of issuers and the quality of assets and the brands behind them. And we just heard before, Fidelity, BlackRock, etc., that these guys just weren't around a year or two ago. So that's why there's been this sea change. And yeah, we're happy to have this product and the team on the platforms, and hopefully things go well for all the investors. Thanks, Gene.
All right, thanks for those amazing answers. And it is no brainer why we are working with OpenTrade. As Julian mentioned, all those checklists have been marked. I am now jumping into the next question. This is targeted towards more to InvestaX. So I will target this question towards you, Nishta. What infrastructure does InvestaX provide to make that process of enabling institutional asset managers and fintech platforms to compliantly issue and distribute yield-bearing RWAs at scale and seamlessly for B2B partners?
I think, as I mentioned, like we have built a proper interface, an earn product interface, which lists a variety of fixed income products. Um, we have from OpenTrade, BlackRock's high yield corporate bonds and Fidelity's money market fund, but there's more in the pipeline in terms of private credit, and of course in future we plan to get more yield generating off-chain assets, which are currently off-chain, of course, real estate, carbon credit, trade financing, and see how all of these could be converted as some sort of, interest or return generating assets and put on-chain. For us, in terms of clients and institutional investors, we also provide a full stack of AML, KYC onboarding process, which is again very seamless. There are certain accreditation requirements on InvestaX side, so we can only take on accredited and institutional investors. But while on the IXS side, we offer this to both retail and institutional clients. We've tried to also reduce the minimum investment amount into these yield bearing fixed income instruments to as low as, for some products it's $1, and for others it of course is around $100 to $1,000 as the minimum transfer amount. So I think we've worked to create a platform which has a very seamless onboarding, simply 2 to 3 clicks to make investments, read through your documents, which are very easily, just again, a click where you agree to your terms and conditions for these products. So overall, the user experience has been worked upon and made very sleek. And at the back end, of course, there's a lot of plumbing work that has taken place so that we can offer, the stability of the real world assets as well as the transparency of blockchain. Yeah, so I think that's what we have for, institutional investors. Thanks, Jean.
All right, thanks for that answer, Nish. And I'm just going to jump into the next question here, and this is open to all of you. But we'll start, of course, with our guest Ronnie here. So the next question is, what makes these products, like the BlackRock high yield corporate bond and the money market fund, different from the typical DeFi yield options that we're seeing today?
Well, so maybe I think I've mentioned it before in one of my previous answers, but it is the stability and predictability of the yield that you're likely to get, versus, as mentioned, reliance on borrow lend dynamics in many of the DeFi pools available now in the market. So that's one, and having that predictable, stable yield is actually a crucial component. And other clients of ours actually commented on this as well, because once they have a stable and predictable yield source, whatever they build on top of that, they have that comfort that they are probably going to get somewhere around, let's say, 7% APR, and that's what they can go off quite reliably. Now, the second component is probably the better quantified measure of risk. So both the BlackRock ETF and the money market fund, there's plenty of information about them online, all publicly available, including things like the portfolio composition and the relevant credit ratings of each component. There is, analyses of the actual ETF itself by, for example, like Morningstar ratings, etc. Whereas it's very difficult to kind of quantify the let's say smart contract risk in DeFi pools, etc. And I guess with that comes better protection that's put in place. Just using real world asset components inherently includes an element of that traditional protection. So like I mentioned, in even the OpenTrade product alone, because we are dealing with real world assets, we are able to install a security trustee that oversees all of our secured custody accounts. And that, again, just lends itself to better protection for our clients, our lenders. And the last point, actually, I think I have mentioned it already in a previous response, but it's the sustainable supply of yield. So, I mean, the BlackRock ETF has, I think, 6 billion in circulating supply. So, yeah, we aren't capped or limited in, the amount of yield that we reasonably can deliver to our clients here.
Yeah, I think I echo the same thoughts. DeFi yields were coming with a risk profile of their own. There was a lot of, you know, liquidity mining or leverage lending, which was happening, which led to kind of volatile and short-lived yields. Uh, with real-world asset-backed yields, definitely the risk profile gets lowered because there is more stable yields coming from, regulated fixed income products, which there are a lot of resources that we can read upon, see how they are doing the liquidity, etc. And I think a lot of these are, backed by actual cash flows. There's transparency. There's no speculation or, inflationary kind of tokenomics around them. So this definitely makes real world asset or, asset backed yields quite interesting. And on top of that, the structure that we have in place is also something which makes at least the products that we are offering very unique and lower the risk profile. We are off. As Ronnie mentioned, we are offering them through bankruptcy remote SPVs, segregated custody, security trustee. So the investor protection is kind of taken care of, and thus this maximizes capital protection for the investors going into these products using, stable coins. Yeah, thanks.
All right, thanks for that, Nisha. Is there anything that you'd like to add to this question, Julie, before I jump into the next one?
No, I think that they've covered it very well.
Okay, great. So it looks like we're boiling down to the last question that we prepared for this AMA. And I think it's particularly interesting given that everything that is happening around the world. And I think this question is still really very relevant today and basically relevant to this topic. So the last question for this AMA is, where is the RWA space heading?
I'm happy to start. Very broad question. But I think whilst we're currently like kind of the bridge between TradFi and DeFi, I do envision a time where all these reward assets that we're talking about will be natively on chain. And I don't mean this from the perspective of the big institutions are coming on chain that we hear all the time. But I mean it from like a digital transformation perspective, in the same way that capital markets had moved from physical paper to digital. It took several decades, but that transition did happen. And ultimately, just because of the benefits of blockchain technology, I do envision that shift occurring again, but from the current traditional digital setup to native blockchain. When that will be, I really don't know, but yeah, it could take 40 years, just like the last transition. Who knows? But yeah, that's my two piece on it.
I think where RWA is heading, I think it started off as a narrative, but I think it's going to be a fundamental infrastructure upgrade for capital markets. And I believe platforms like ourselves, InvestaX, IXS, OpenTrade, that are going to build it right uh, from the very beginning will kind of power the next wave of global financial inclusion. We are already kind of seeing a massive shift from experimentation to institutional grade infrastructure, and that kind of leads to the thing that regulation and innovation can coexist and attract real capital. So not just crypto native users, there will be a shift to institutional adoption, which we are seeing. And I believe capital markets are up for change, as Ronnie said, from paper to digital, or from paper to basically DLT blockchain. That's where I think RWA space is heading.
Yeah, I guess I'll wrap up. Yeah, I think we'll see now an incredible growth in stable coins, well, growth in Bitcoin, all digital assets, stable coins as well. With the Genius Act coming in the US, the stable coin, which is predominantly now USD by, I think, something like 99.9% or something. And then stable coins in the world USD. I don't see that changing very quickly anytime soon. Most of the other major currencies have failed to act or are failing to create whatever regulation they need to regulate to increase the growth. So what that means is I think we will see the lion's share of stablecoins in US dollar, the increase in US dollar dominance around the world because of that, therefore the increase in appetite for US dollar denominated real asset tokens, and then an increase in to the and then a, and a, s- and seeking the highest quality from a risk return perspective being the fixed income assets that we've been talking about all today. And I think that we'll find in the next, if there is, and there should be some kind of bear market for Bitcoin, a lot of speculation around that. I think it'll be a lot less severe in terms of the drops. This will be the first real bull market for real world asset security tokens. We've had a cycle now, previously, the last year or two, finally adoption from the digital asset industry um, into actually buying real asset tokens. Before that, we were called security tokens, and most of it was private assets, and it was very hard to scale any of these assets. So in the last year or two, we've started to see billions of dollars flow into the treasuries. We will see hundreds of billions in the next cycle, and then we'll see people moving up the risk curve from treasuries um, to high yield bonds, to private credit, to et cetera, and we go out from there. And we're going to see a lot more platforms selling real asset tokens from um, platforms like ours. You've got fintech platforms now selling crypto. Their path is towards real asset tokens. Crypto exchanges have illegally been selling real asset tokens for years. Some of them are now trying to do it properly through licensed partners, and like ourselves, we've got joint venture with 4 crypto exchanges to power their real asset tokens off the back of our licensing. So you're now going to see a massive convergence of all the fintech players and all the Web3 players all trying to get as many assets on their platforms to sell their users. And real world asset tokens are a much bigger universe than crypto, because there's many more real world assets. So yeah, I think we still seem to be just at the beginning, even though we've been at it for years. But I think we're going to see dramatic multiple times increases over the next couple of years in terms of the volume and the assets that are being bought, and it's going to just continue to grow. So that's it from me. Thanks, Gene.
All right, thanks for that, guys. And now that we're wrapping up most of the questions for the AMA, I think we were supposed to do a live Q&A, but in the spirit of keeping it short and sharp, we are just going to pick 2 from our pre-vetted questions from our community. So I guess the first one will be directed to you, Ronnie. So how does OpenTrade make sure that these on-chain fixed income assets are actually backed by real and safe assets?
Um, okay, so maybe I'll go back to the entity that I've mentioned. So we work very closely with an FCA regulated asset manager, Five Sigma. Five Sigma actually manages the entire portfolio of real world assets for our OpenTrade special purpose company. They provide basically weekly attestations that confirm that there is this amount of this specific collateral held in custodial accounts that basically back the OpenTrade products. So all of our clients, all of our lenders receive that on a weekly basis and can confirm that, in fact, basically, all of the principal and accrued interest is fully backed by equivalent collateral of the pre-agreed type. So, for example, the BlackRock ETF or the Fidelity Money Market Fund.
All right, thanks for that, Ronnie. And then I guess to wrap up, this question, being the topic about navigating regulations, I guess I will direct the last question towards you, Nishta. So I think you may have repetitively brought this up, but I guess for the sake of the community and the person asking, how does InvestaX streamline, the compliant issuance and onboarding process for institutions and investing in products like the high corporate yield BlackRock ETF and the tokenized money market fund?
Yeah, just to reiterate again, we have set up again a bankruptcy remote SPV, and there's a back-to-back lending arrangement with OpenTrade. So our users, they go on the earn product interface, they make a loan to us. That seamlessly flows from our platform to OpenTrade's platform. We have tried to keep it all through smart contract forwarders, which are plugged into OpenTrade's platform. Before a borrower or a user can do so, they are required to onboard on InvestaX. Onboarding again is pretty quick. Just a POI, proof of identity, proof of address required, and On InvestaX, the product is meant for institutional clients because that's what we can take on under our licenses. But if there are retail users, they can come into these products through IXS, which has a more broader target audience under its own licenses. So complete onboarding KYC, land on the earn product interface or the earn product page, click on the loan button, deposit button, your USDC passes through from the smart contract to OpenTrade, and then there's a backend arrangement at OpenTrade, which Ronnie explained about working with FCA regulated asset manager, and then all the loans are the principal and the interest is backed by uh, real securities or real BlackRock fund ETF units, which are held with a custodian. There's a security interest created on that in favor of the security trustee. And the security trustee is acting on behalf of lenders. So what this means is that, if there is an event of default in a back-to-back lending arrangement, the lender, which is us, to open trade, we can instruct them to, liquidate the collateral. And thus there's a proper full recovery path offered to our users in case of a default event. So that's how the whole structure works along with OpenTrade and their backend FCA regulated entities.
All right, thanks for those answers, guys. And we are just 8 minutes shy away from that 1 hour mark. And that officially wraps up our AMA for tonight. So, as always, please stay tuned for our AMA recap tomorrow. I know X usually has connectivity issues, but with our recaps, you can always make sure that you can always play the recording on our space. And always make sure as well to check out our partners, Open Trade, as we look forward to this partnership and keeping this going. Guess that is it. If there's any closing remarks from you guys, please feel free to speak up, and then we can end it from there.
All good for me. Thanks, Gene, and thanks, Ronnie and Nisha, for joining. I hope that was enlightening for the team.
All right. Thank you, guys. Have a good one.